How to find the best stocks to invest in. What's up, guys? This is Sang Win, and in this video, I want to give you guys the formula that I use to find the best stock to invest in. Okay, and it basically called the Can Slim formula. Let's take a look at my video right here. It is spelled CANSLIM. Okay, but first, before we get started, I have to do the disclaimer to get things out of the way. Okay, disclaimer. This is for educational purpose only and entertainment only and is not intended as a recommendation or a solicitation to buy, sell, or hold any investment. Trading and investing can be risky and you can lose money. You agree to hold other people harmless of any result because you are responsible for your own result. Okay, let's get started. So basically, what is CANSLIM? CANSLIM is an acronym for current earnings, annual earnings, new products, supply demand leaders, institution, and market direction. Okay, basically, they use the word CANSLIM for easy to remember. Okay, now I'm going to break it down what each component means, how to use them, and how you can find stock that fit the CANSLIM formula for explosive growth. And I'm going to give you 5 examples of the past winners that fit this CANSLIM formula, so you can see what are the winners actually look like. If you know how the formula works, right, you see how the past winners fit the formula and how much they grow. The next time you see a potential winners who fit a lot of these criteria or all the criteria, you know you found yourself a potential big winner. That is how I do it too. Okay, so CANSLIM. C stand for current earning growth quarter over quarter, year over year is best. What it means is you don't want to invest in a company that lose money or doesn't make any money for the investors, right? Investor, when they invest in stocks, they want to profit. They want a company to grow and make that money. So if a company is growing each quarter and growing each year, they are making investors money. And that is how the stock normally follows after that. The price will continue to grow up because investors, they want to have the money in something that is solid and that is making them money. Okay. Next one is annual earnings should be growing. Okay. Meaning if last year the company makes, let's say, grows by 10%, this year it should be growing by 20%. That's a growth. That means the company is growing. When the company grows, that means there's more demand for their services and products. Okay? And when there's more demand for the services and products, that is how the company makes money. And as the company makes money and grows, the stocks normally follows and the investor makes money. Okay? Next one is N. N is for new product, innovative product, disruptive product, or trend making product. Now, let me give you an example. We are heading toward the internet age, information age, where things are done through electronics, right? Done through the internet a lot. Even right now, we are basically trying to go green, meaning trying to cut less tree down, spend less money on making papers, and use less and less paper. We want to go green, okay? And one of the company that is in position of this is Doku. Okay, Doku, we signed an application electronically, and everything is being processed a lot faster. That helps slow down or reduces killing trees and reduces paper waste. Right. So that company is in the trend or have innovative product that fits the demand as we grow into the electronic age, and everything is done electronically. Okay, that's what that means. Now, the next one is S. S stand for supply and demand. Okay, do you believe that sometime when a company doesn't have enough supply, they will go into bankruptcy? If the company does not have enough supply or services to meet an ever-growing demand, the meaning the demand is growing so fast, the company can actually go bankrupt and close down. Okay, so what you want is a company that has products and services, okay, that is scalable, meaning scalable, right? Meaning as more and more people are demanding their services and products, they can actually produce the supply to meet the demand. And that's how the company can grow very fast. Now, if they have bottleneck and they can't grow, sometimes the company will bankrupt because the demand is demanding so fast and they can't meet it. All right. Next one of the canceling is L. L stands for leader of the industry or leader of the group. Now, why would you want to trade or invest in the leaders? Leaders are often the strongest because in order for them to be leaders, number one, they have to be the strongest, right? They have to be best in the industry or of their group, right? Leaders move best, and leaders normally they are the first to green and last to red when the overall market is coming down, right? When the overall market starting to go back up, they go up the most and they go up the fastest. That's why you want to track the leaders and find them. Okay. Now, just because a stock is a leader now does not mean they will always be a leader. Okay. Sometimes there's something wrong with the management, or a new competitor might come out with better product or better services. The leaders will lose their leading position. So you have to keep track on who is the leader or who is the competitor, who could possibly become the next leader of the group or of the industry. Next one on the list of the canceling formula is I. I stand for institutional ownership or institutional demand. Here's what it means. Now, institution, who are they? They are hedge fund, mutual fund, endowment fund, trust fund, life insurance company, and big banks. They have hundreds of billions of dollars, right? And when these institutions buy stock, usually they buy it for long term, okay? And usually they buy it because they expect the stock price to go up. Why would any institution spend billions of dollars on a company if they expect the company to go down? They won't do that, right? Right. So normally, when an institution invests in a company, right, they spend millions or billions of dollars to invest into the company. They expect the future of the company to be very bright. Okay, they expect. They don't know, but they expect. They have done the homework and they expect. Okay. So when institutions step in to buy stocks, they normally anticipate that the price stock is going to go up in the future and to expect it to go up a lot. Okay, now the next piece of this canceling formula is M. This one is the most important piece of the puzzle right here to us as small individual trader investors. Why is that? Because the direction of the market is like a tsunami, okay? And as you know, the tsunami will move all the boats. Most of them, they will move all the boats. And all the stocks are like boats, okay? When the tsunami and the giant wave comes, all the boats move. Now, let's say that you want to buy a stock and you want to sell it for a higher price later for profit, you don't want to buy when the market is come crushing down. Okay, that's a bad move because you don't know how low the market can go, right? You have no idea. You could be stepping into a bear market, and it could be the price could be much lower than what you expect it to be. You have no idea. Because if anybody would know for sure, they will become billionaire very fast because nobody knows for sure what the market is going to do. So usually the smartest way to do is to invest when the market is stabilizing or is heading up. Okay, it's heading up. Because we as trader and investor, the timing is important to us. And we normally don't like to look at our portfolio and see red, day after day, or immediately after we get into a position and we see it's a loss. That's not good for confidence, emotion, and psychology, right? So we have to pay attention to the market direction. Now, what affects market direction? Big news, okay? Political news, economy news, trade news, and all kind of news. And as you know, recently we are in this COVID environment, and you know that president, uh, when Trump, the president, said that he was test positive for COVID, immediately the market gapped down the next day when it opened, right? That market direction forced the market to gap down. So if anyone who's a trader investor step into the market, as soon as you buy, the next thing you know is your portfolio is red, and then it's red, 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 right? After he got a good news that he's okay, then the market started to stabilize and come back up, right? So you gotta pay attention to the direction of the market, and the direction of the market is usually um, foretell by big news. Okay, big news. Big news affect the overall market, which normally affects your stock. Not 100% of the time, not always, but normally. Because sometimes the stock can be so strong, the market can go down, but it can still go up. Okay, so that is how the basic of the CAN-SLIM formula works. Now let me show you 5 examples of stocks that fit the CAN-SLIM formula, and you can see how fast they grow. Okay. Okay, the first one up is Doku. Here we go. Doku right here. Doku is in business for signing documents over the internet. They are very safe and secure. So as you can see, their price was hovering up and down in the 50s and 50s, 45, 60-ish, right? You could invest it maybe about 2 years ago, close to 2 years ago, and if you invested close to 2 years ago, you would have made 4 times your money. 4 times your money for a 400%. No. 4 times your money is a 300% profit. Okay, 300% profit. Okay, now look how nice it grows. Look how nice it grows. Now, okay, moving on to the next one. Next one is Zim, right? Look at this. It was in the 80s and 60s. Okay, as we move into the trend, which is work at home during the lockdown time and social distance, we had to stay at home. A lot of workers, they work through the internet and they work at home, so they require meeting through the internet. And Zoom is a platform that provide those meetings. They record videos, they show videos, and they do all kind of stuff. That's why they were growing during that time. So they fit the trend. So let's see, they fit what is called new product or services, disruptive product or trend making product or services. Okay, and they have service supply that is scalable. That's why the company grows so fast. Look at it. Look, from the 90 to about, 500, 550. Now it's at 400. So let's say, as of closing is right now is at 400. 400. Let's say you got it at, let's say you got it when it was 100. You still made 300% profit, or four times your money. Four times your money. Okay, let's move on to the next one. Next one. This one took a little bit longer, but this is Team. TEAM. Okay. In 2017 and 16, it was hovering around $25 to $50, right? Now, if you invest in that time, uh, 19, 20, about 2 to 3 years later, it went from 50 to 200. That is also four times your money. So a 300% profit. Okay. Let's see now. Another one I like is Roku. Okay. Roku in 2018, it was up and down around 40 to 60 ish, and then there was a nice growth and a pullback. But basically, if you have invested in the company and held on until today, uh, let's say you got in at 50. Right now it's at 228, 230 ish. So you made um, more than four times your money. If it hit when it hits 250, that's five times your money. Five times your money is 400% profit. Okay. The next one is I like is Fiverr. Okay, Fiverr in 2019 and early 2020, it was around $20 to $30. $20 to $30. As of closing of the last trading days, it was around 165. So let's say you got in at 30, right? Let's say you got in at 30. So 165 divided by 30, that is 5.5 times your money, meaning a 450% profit if you bought somewhere in the $30 range. If you bought it lower, that's much more profit. So let's take a look at how Fiverr fit this CanSlim formula, so you can see the growth. Okay. So Fiverr is what is called a freelance platform where people can advertise their skill and service for a fee. Let's say you want to have someone build you a logo or design a logo for your company. You can go on Fiverr, and there are many people with designing skills, and they advertise it. You can buy their service through Fiverr. That platform is international. It's in many countries. Okay, and their earning has been growing, and they have and new product, disruptive product or trend making. They fit all. They have new product because there'll always be some new people with new skills that get on there, right? Their product is changing the way we find services. Normally we have to find people in our local. Sometimes people in our local area, we can't find the people who has the skill or the service we need, right? So now you can go on the internet through Fiverr and find people halfway across the world with the skill you need. Okay, and you can connect to them and do business easily, right? Do they have trend making product? Whatever trend that we get into, there's a group of people or services through Fiverr that will fit that trend or be trend making. So Fiverr, Fiverr has it all, right? And the next one is supply and demand. Does the company supply and demand has scalable? Of course, because as people charge for it, they are just a platform that connects the buyer and seller together. And they get a fee. You know how Amazon is a platform to connect buyers and seller of physical products, right? Now they're starting to go into services. Fiverr is a service. It's a platform for service where they bring buyers and sellers together for their services. Okay, and it is scalable. And right now, Fiverr is the leaders of the industry and of the group, right? Does Fiverr has institutional demand? Let me see. Let me check. So here it is. Fiverr institutional ownership. Look how much these guys owns. Look, this guy, Bessemer Venture Partner, 256 million worth. Another one, Elson London Management, 202 million worth. And there are a bunch of others, okay? So basically, it fits institutional demand. Now, as you can see, Fiverr has been growing by a lot, and it grows with the market. So when the market direction is up, Fiverr is up a lot during that time because Fiverr fit the CanSlim formula of all these, and especially the leaders of the industry and of the group. So basically, that is how the CanSlim formula works. Okay, when you find a stock that fit all the pieces of the CanSlim formula or the acronym, and when the market direction is in an uptrend, normally these stocks will perform very well. Okay, they will perform very well. Let's see. So guys, that wraps up my video on the formula that I use to find the stock to invest in and trade in. Do me a favor, subscribe to my channel and hit the like button and make some comment. And if you feel like this information has helped you to invest or become a better investor and trader, feel free to share this video with your friends and family. If you have any question, feel free to make a comment below. In the meantime, that will be all. Have yourself a great day until my next video. Until the next time, have a good one.